Everyone, this is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. Today we're going to be talking about Bitcoin. We're going to talk about Bitcoin price predictions into 2025 and beyond. The future of Bitcoin. This session is going to be so extremely exciting. Not because we're giving price predictions. I mean, if you want them, we got them. More importantly, we're gonna crystallize our expectations about what future development should look like, and most importantly, where we're wrong. This is gonna kind of weave in gold, what's happened in the past in gold, when structure breaks, when it doesn't. This is going to be one for the books. I hope you are excited. I know that I am. We are seeing that, you know what? It's 10 years climbing today. It's still coiling inside our coil, this multi-year, 2.5 year consolidation pattern. When it breaks, it's going to break big. My expectations are that it breaks out to the upside, but whatever, if it breaks to the upside or downside, you know where you're right and you know where you're wrong and you know where to manage risk around. More importantly, my own speculation is that it breaks to the upside and then actually that causes some type of destruction where then we're going to see the other way. We have that beautiful X thread on it. If you haven't seen it, you got to look for it. Ask me if you can't find it. And that's a story for another day. You know what? We got like spot on as far our expectations on what was happening with. We saw that we had the core CPI come in softer than expected. And what does that mean going forward? Last I checked, it didn't really change things at all as far as the September meeting. You saw, priced in, probably like nothing's really moving, nothing's really changing. Tomorrow we have more inflation data, right? We have PPI. So let's see if we get some type of affirmation or if we get a discrepancy between the two. And we were just looking at true inflation. We were saying, you know what, likely that there's a good chance that this comes in a little softer, even though there are a lot of people out there expecting a hotter print. And more importantly, like, again, if we get to some type of, resolution, if we don't have too many tacos, hey, today is Taco Tuesday. It's been a long time since we hit the head snack. If we get into this session, and I think that this session today is going to be like, you're going to love it. It's going to be like candy. You're going to love it. And if that's the case, we'll break out some head snack here, being that it's Taco Tuesday. NVIDIA flying on the news that there was a bit of a taco. What was that taco? Well, we saw that NVIDIA CEO met with Trump, and then they said, you know what? We're gonna go ahead and we're gonna bring back our chips to China, and we're gonna guess what? China's holding some pretty substantial trump cards right now in their rare earth materials. There is word that a mine is being opened out in Wyoming, and if you ask me, I would think that this is a national security threat for the United States. Rare earth materials, they have the ability to do it. Go ahead and begin mining it. Source it where so other places else. But right now, the Chinese, when it comes to this particular aspect, they have a trump card that is preventing the U.S. from being able to go ahead and apply pressure how they would like. And what happened here, if you read between the lines, was that China was like, okay, you want rare earth material, we want chips. NVIDIA here screaming up, gapping up on over here. Our position opens up now to 20% into profit. Tesla earlier today was pending buy. Now it's not even close. So keep an eye on Tesla. Aside from Tesla, when it comes to stocks, we are completely fully positioned into the market. TQQQ, 28% into profit. NVIDIA now 20% into profit. You love seeing them, the positions, hold on to your winners. And then, the longer you push them, and then 7% into the spot ETF after the recent pullback. We're seeing FNGU, our best performer overall, late entry on the ticker change. Otherwise, it would have entered right here where you saw that TQQQ entered. And this would be a massive position right now, 40% into profit. Nevertheless, we take the signal as it unfolds, minus 1% into profit, and then MicroStrategy holding 11% into profit. Here we go. Here we go. Boom, 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 boom. You guys got sound problems. Hold on a second. How's this for some sound right now? All right. Sorry about that. I'll make sure that we get going over here. And as far as positioning, let's see what else we got going over here. First, we'll talk about it, right? Bitcoin bull runs still continuing to hold over here, 18% into profit. From a discretionary standpoint, let's take a look. We have the breakout. I thought we would break out into this area over here just below 119. Definitely took a lot more shorts out in the process. And then, the degens out there, they can't help themselves levering up. We have a lot of liquidations. Did we hit some over here at 115.70? Let's take a quick look over here and let's see what's going on. And let me just refresh this page, take a quick look at what's going on with here on Binance. We have some, I feel like we just came into that level. Maybe we just missed some of those liquidations. A lot more on the short side, and shorts feeling comfortable building up lots of leverage positions over here. We got some big ones over here. About quick math, almost $1 billion cumulative long over here. You have to go 1.8 all the way down to just below 115,000. So a lot of shorts, a lot of longs, heavily levered, are definitely at the wrong time. Definitely not right on time, right? And chasing could get you really, really hurt. There's absolutely no need for leverage at all. There is absolutely no need for leverage at all. So yeah, we could easily, I think the extension to the upside exceeded my expectations. What I am hoping for would be to leave some space between what is the breakout, and because if there's some space and you start resuming up, that signifies that there's going to be there's a strong bid, and likely we're going to see some follow through, but that might not happen. And we could get a retest into the yellow line. We could get a retest as we looked at yesterday, right? And you can see the resistance here and over here below where we have the yellow line. And ultimately, as long as we don't take out this sell impulse, the structure here is well intact for a breakout, a retest, and a resumption up. There's no like right now what we're seeing is extremely healthy. Stop. Oh, is that a poor placement? Maybe. Stop triggered over here on the discretionary trade, and 7%, but it feels like a loser to me. What's next? Is it too soon? And I think it's too soon to do this, and maybe I'm wrong. That seems like an aggressive angle, and yeah, I think from a discretionary standpoint, I'm just going to give it more time. I think that just might have been poor stop placement on the discretionary, approach over here. So we'll find out in retrospect what ultimately happens. And then just to move over into buy side boost, we know that Solana is still out of the trade. So Ethereum, why it's still running, is holding Solana's allocation, and Bitcoin here exiting the market, locking in some profit. And as the discretionary gets out of the market, so does the mechanical. Right now, it's just Cardano long and Ethereum long into the market. Solana remains sideline, and Bitcoin here back now out on the sidelines. That's our positioning across stocks. You could have excessive crypto style gains in stocks on the daily time frame, and as well as in Bitcoin and crypto. Let's continue over here. We got a lot out of the way just to get going over here. We took a look at what's going on here with equities. Oh, that Nvidia was the story over there, and we saw the taco from Trump as he's forced to open up the chips, Nvidia's chips, to the Chinese market in exchange for their posturing. That was my read on it. And then you saw over here, or I saw over here, Trump's crypto czar, Sachs, says NVIDIA chip sales to China are part of larger talks. Those larger talks are the rare earth materials, and that's China's leverage in this whole situation. The U.S. has to do something to get out of that situation they currently are in. And we didn't talk about yet the dollar. Yesterday's session, we talked about the dollar potentially getting ready to close on that buy impulse. It closed yesterday, buy impulse intact, and we're seeing follow through out on the dollar. Remember, by the end of this month, seasonalities point to a very favorable period for the US dollar. So right now you have a record number of speculative and hedge funds short the US dollar. That could wind up adding to quite a squeeze, which is interesting because the whole hypothesis is that, yeah, fast forward, ultimately the dollar after that 10% slide is going to be down even more. But you know what? Markets have a history of reverting and mean reversion in between. You know what? A lot of people are like, oh, maybe I should back off the leverage right now on Bitcoin because the dollar's breaking out here. I wasn't really watching that or aware of that. And I just want to point out that, you know what? First of all, you don't need leverage. Second of all, if you look at January 2025 at the start of the year, the dollar coming off more than 10%. And up until Bitcoin's recent breakout above 111,000, and it's trading right now at 115,000, Bitcoin during that 10% drawdown on the US dollar didn't go anywhere. It was completely flat. I would never have expected that if you told me the dollar was going to be trading off 10% in 6 months. I would say Bitcoin's going to be higher. That's not what happened at all. And as the dollar in recent days has been being able to try to push out over here, that's when Bitcoin made the breakout. You all remember, and I'll find the tweet later, maybe, but you all remember I said, listen, once the dollar starts to strengthen, watch out. That's when Bitcoin is going to move. That's what's happening right now. I don't ask me why. I don't know why. But someone else will tell you about it later. I'm just trying to go ahead and do my best to not only read the market, but to get you to have an even better read, right? That's why we're here to work together. Here we go. Let's move forward. So I never staking Bitcoin, no idea. Let's go. First, to start this off, we're gonna to start what off? Well, you guys want to know as far as, future price projections for Bitcoin, what we see happening into 2025 and beyond. And obviously this is an ongoing conversation each and every day. And those that are here and show up and put the work in, their accumulative knowledge is obviously is going to be greater. This is how this works. And there's no question that thus far we have been spot on. Some would say ahead of the curve, right? And well, that remains to be seen. And if you looked at yesterday's session, I gave very clear and defined markers when we continue to see either an actual undebatable move from the 4-year cycle, or we actually see by the end of the year a lot of the same, including massive vol decay on the upside, diminishing returns, and the market peaking at the same time. That's all possible. That's not my thesis. That has not been my thesis for quite some time. And I've been talking about this longer move during this phase of adoption. And I've been saying very consistently, the cycle high is going to come much closer to 2028 having than the 2024. A lot of people believing that we were going to have a left translated cycle. And indeed, that has been proven false. A lot of people now, obviously, it makes a lot of sense. They're looking for the cycle top to come into the end of this year when historically it has come, whether viewed from the amount of days after the halving or any which way you look at it. That is historically what has transpired. Now, in order to continue looking at Bitcoin and our expectations going forward and where we're wrong, we're going to first start this off with gold. And then we're going to go from gold, and then we're going to look at Tesla, Amazon, Microsoft, and put it all together. This is going to be wild. You're really going to enjoy it, and I look forward to getting into with you. Now, just one thing as we talk about all of this, and obviously, there's in the description below is a video that talks about like a global recession risk, and if that were to happen, if you watch that video, and I highly suggest you watch that video, it talks about what would happen to Bitcoin in that scenario. And right now, it doesn't look like the US is headed into recession, but we have to continually follow the macro. One of the things that we're watching over here, and I was going to point out over to here is, we were talking about why the next 40 days, the next 6 weeks and through the summer were so important. And let me remind you, as we come into September, first 3 weeks of September are historically very negative overall. We get through September, and then you know what? Likely we start seeing a lot of this behavior, and then we're going to continue to match that 1998 pattern out of the drawdown, which is even more spectacular, being that it's not just 1998. It's from 1996 until today. The two match almost identical. It's absolutely I can make the case easily why we continue to see further push to the upside on risk, but that's not like a foregone conclusion. We have to watch the macro. We watch the macro closely, and we're seeing whether or not we see a deterioration in the hard data. And if we do, yes, that could point to something like a potential recession coming. And if that were to happen, watch that video below. It's going to really help you and set your expectations straight. Let me start off with gold. And if you look at gold over here right now, gold trading at $3,300. We were right here in March of 2023 calling the super cycle gold breakout. In retrospect, it wasn't the best call. And it wasn't the best call because you saw gold draw down over here. And it wasn't until you saw the real rollover in escalation in deflation that gold begin to really run. That was done, by the way, off of when the Fed began their hiking cycle. And as the Fed began their hiking cycle, that is like usually the beginning of the countdown to the slowdown, right? And I've talked about one thing that could cause gold, which if you look at the RSI right now on the monthly, is extremely overbought. It has not yet even begun a pullback. And my expectations are that it's time for it to cool off. It doesn't mean that it will, but that's my overbought could remain overbought longer than people can remain solvent. The same thing with oversold. Oscillators are really good until they're not. And that's, and it works both ways. If you're selling overbought and buying oversold, that works out into overbought remains overbought or oversold remains oversold, and vice versa. If you're looking just for those one occasions where you look to buy overbought, on all of the oscillations, you're going to get wrecked. Very difficult. But something else to watch out for over here is every time the monthly on gold has been this far overbought and then pulled back, once price was able then to take out that high, that's when the next leg up has begun. So what I'm watching for over here is two things. When we do have the eventual pullback on gold, You're going to see this is pointing to like a consolidation flat area ahead, which would be really healthy. I'll be looking for, once we start begin to see that pullback on gold, two things. I'll be watching when is the right time to re-enter long positions. For example, over here you have, is this the right time to enter? Yeah, but you're stopped out. Is this the right time to enter over here? Yes, it's over here, and it's not when you make the new all-time high. Same thing over here. You come back over here. Here's the all-time high. This is the confirmation. But CTM, we're looking to enter out of the trend line break to the upside. So I'll be watching for that. And then the ultimate confirmation when price takes out the high of gold, right? Whenever that is, but let's assume that it's right here around 3,500. That's when I'm looking for the next momentum leg up on gold on the breakout of that after the monthly RSI has reset. However, you're just because that's happening, it doesn't mean it can't be invalidated. That a lot of people, they have some type of idea about what they think is going to happen in the markets, and then what they do is that when they get that entry, they go ahead and they assume that it's going to end up ultimately in their favor. And that's not what you do. What you do is you look for where you're wrong and you have to migrate your risk. You cannot just assume that you're going to be right. Does that same thing like does that same thing include what the future price projection is for Bitcoin? Absolutely. Absolutely. There's no question about it. You cannot just assume one thing is going to happen. You have to look for where you're right. How much of overbought is inflation related? So, right now, I think probably and likely what we're seeing in the story about gold, Robert, is much more of what we are hitting on yesterday. In yesterday's session, we were talking about Lynn and how that's MicroStrategy following Dog Nation's CTM dashboard over here. But we were talking about Lynn talking about that, you know what, as far as whether or not this time is different, it has a lot to do with what's taking place between fiscal dominance rather than monetary dominance. And, monetary dominance is right now or in the past, Fed is kind of in control. They're able to go ahead and do things like raise rates to put a brake on the economy. They're able to start quantitative tightening. Guys, obviously that those things are both happening. Rates are way elevated, and you're also looking at quantitative tightening. I mean, granted that has been reduced, but during that time for the last 2.5 years, risk has been roaring. And then you have things like fiscal dominance right now. When you look at the debt to GDP ratio, you look at the deficits, you look at the interest that is being accumulated on these deficits, and you have to wonder what is driving. And this is again today we need to get into this likely tomorrow, and you can compare past periods over here where we did have those the similar situation with fiscal dominance actually being the primary driver. And is that what's happening now? You talk about inflation, and this was a very inflationary period over here in the 70s. A lot of people look at the gold bull run of the 70s, and they're saying that, well, it's very, very similar right now. And then, the other thing is to look at, well, you know, do we mirror this period a lot more? And is it not the inflation? Let me go back, Robert, and that's going to be an ongoing conversation tomorrow. I hope to hit more on that, but I really want to get into the heart of today's session with you all. MicroStrategy still looking great in light of Bitcoin's pullback. And I just love the fractal that's taking place on MicroStrategy. So I want to go ahead and take a look at it with you. You all know this is Bitcoin in 2012, that massive first pump up. And then you saw the ultimate consolidation, but it's a massive drawdown. And then it makes the move up into the launch pad. And then and look at our mechanical system right on the launch pad exit entering the market. And I mean, Bitcoin takes this out. This is happening on Riot as well, right? And we haven't just checked in. So this is happening on, let me just zoom out, on a much smaller time frame. We were looking at I'm sorry, MicroStrategy is happening on a shorter time frame. This is Riot on a bigger time frame, including the 2021, and then you have that same massive drawdown, which is just a large consolidation, and then the big move up into the ramp. If Riot breaks out over here, that could be some glory here for Riot. Jumping back over, getting back over, and getting into the lead into this story is gold. And I was looking at this chart of these gold cycles, and it talks about like the first half, second half, and in the end. And if you look at this current cycle and where we are, and you can see that they have it roughly somewhere around, we'll say, uh, 280 weeks. And if you look, this is very important here because this chart looks to me really cool, right? It looks really cool. You go ahead, you look at it, and then we're going to go ahead and we'll see. Well, this is the bull market breakout right here, and well, that's different. That's 71 weeks. Okay, well, guess what? This CTM entry over here, this would be the earliest opportunity to actually call the bull market breakout, and that's 140 bars. And the way that chartist or analyst is doing that was doing it from here, or or maybe not, maybe even from here. Let's see how many weeks that is. 280. So it seems rather arbitrary to me to be caught from here, like 280 weeks, 280 weeks. It's pretty close, depending on when this was published, which was probably a week ago or two. And so for me, that's very arbitrary. And why are you not calling it from down here, right? This would be again that's a CTM breakout over here. If you're lining it up after being stopped out, by the way, 1, 2, 3 times or 1, 2 times, you know, this is ultimately the earliest. But for me, this bull market began over here. The bull market began on the breakout of the mega cup and handle, and that's where it's begun. And there's nothing wrong with how this is presented, but how anything is presented, you need to go ahead and you need to go ahead and look at what is being presented and then determine whether or not you agree with it. You can't just accept everything on face value. You have to question everything. You have to use your ability to critically think. And so I mean, and then silver, by the way, and silver here holding 37 and above 36, and it's fantastic and it looks great. And this is where we're looking on this breakout, on this mega breakout over here. This is where we're looking for, well, something's wrong, and you have to go ahead and reduce risk. And as long as that holds, super healthy over here. I'm not going to get into any underbellies here today and potentially what they could be or where they are. We'll look at that at another time. And then we have over here a similar situation with these silver cycles. And I haven't looked into whether or not or how accurate they are. We looked at the RSI, right? And we said when that monthly RSI breaks out, that's when that leg up happens. Here you have this would be an over bought RSI, breakout, leg up. Again, same thing, breakout. Oh, look what happened here. And that's why you can't just always assume this is 2020. Guarantee it. I believe this is for sure 2020. During March 2020, and that's an anomaly. But those type of anomalies could happen, and that's going to come like into our analysis in a moment. So pay attention to that. And then ultimately, when it broke out again, you could see the move up. Now, my whole thesis on the metals is that this super cycle, I called it back in March of 2023, it will continue to run until the moment comes, whenever that is, that the Fed is forced to inflate the system again, to flood the system. And again, the first time that happened in recent memory was in 2008. And then it took 12 years to 2020 for that to happen again. And then in 2020, our premise is look, sharper, quicker, more violent cycles. It's not going to be another 12 years until that happens again, right? It's going to be much sooner than that. Does that mean that the big print is coming tomorrow? Or I should say, the next big print is coming tomorrow? No, it doesn't mean that at all. And, what they try to do is push out the cycle as long as possible, as far as possible. They're not in a rush to massively devalue the currency and like put a spotlight onto what it is they're doing. They want to, there is the lender of last resort. If the system's imploding, and it will, they're there to go ahead and maintain the liquidity. And it will happen again. And when that happens again, shortly thereafter, we're going to see a peak of the gold super bull cycle here. And then we're also going to see silver running like a rapidly against gold and against the dollar. And then ultimately, you're going to see a return to and a focus on growth. And there's going to be a lot more attractive investments than metals at that particular point in time. That's my view on when that happens. And rather try to look at what happened in the past and how this is lined up is another question, right? I'm that's how we're viewing it. Now, let's get into some fun stuff over here. And if first of all, if you're still with me here, smash the like button. Let's get going. Let's actually play a little bit of head snack here before we get into today's session.
Analyzing the charts, hitting projected targets within the margin. Find the flow, sip a matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing, the prices might be slashing, just to pretend they're in fashion. Hit the like button, comments, and smash it. Boom, boom, Jordan in the room. Grab the bull by the horns and to the moon. Flow from the plateau, make the play. Boom, boom, it's a taco day.
Indeed, a little bit of head snack on this Taco Tuesday. It's true. You know what? Most people out there, what they wouldn't do is they wouldn't have a 2.5 minute, 3 minute intro in the beginning of just music. YouTube is like, you have to attract an audience. You have to come in big. You have to capture attention. And then you have to keep that attention. That's great. And that's true if that's what your objective was. Our objective is to have our pulse on the market at all times, to have a read on the markets that we know how to stay on the right side and to be forward thinking. This is what our focus is on. This is what's important to us. Those other things are absolutely true if that's what your objective is. And have shorter videos, right? Do not stream for an hour and a half if you want to capture someone's attention. This is not, look, this is actually for people who want to go above and beyond, and they want to have an extremely unique and clear read on the macro. They want to be like they have a brilliant read on TA, discretionary standpoint, and above all, to have a mechanical edge in the markets that is going to be able to outperform the best of the best. Let's start this off now, looking at what is going on, and I suppose we should start it off over here. And I have right now, this is Bitcoin's current, right? Remember, I first introduced this to you. I said, well, this is the hype phase when Bitcoin is first launched. It then moves into the facing reality. If it's able to make it through the facing reality, it enters the ultimate market opportunity. We've then looked at things and other assets that have done that. Here's Amazon in this fractal over here. And I have them lined up from the top of their hype cycle. The reason I have it lined up from the top of the hype cycle is because that, if I align it differently, if I align it from, which is kind of how I think it should be aligned, is as they come out of the facing reality phase and they enter into this new regime. Except that if I do that, people then like look at the price of Amazon and they're like, "Oh, you think Bitcoin is going to 7 million by 2030?" And no, I don't think that at all. I think that what I am, or what one should read from this chart, is that rather than people's expectations of what they generally see, and that would be like diminishing returns, and then, you know, this kind of looking like this, that what happens is that you're going to see Bitcoin actually move towards the top trenches, right? If this is, let me just go ahead and line it up, like, so you could see a little, or I could see it. So I'm looking at this trend line over the top here, and this is Bitcoin now. And my expectation is that Bitcoin is going to be able to move towards the top third of this, rather than continuing to drain down. Now, this is where it gets interesting. Let's take a look at this chart over here. And it was asked, hey, listen, where the title of the video is, where do you expect Bitcoin will be by the end of 2025? And we looked at the breakout that's currently underway, and a measured move of that breakout is 170,000 Bitcoin. And assuming that this Bitcoin continues to hold its breakout and doesn't fail, you could do things like align the seasonalities into the end of the year. We looked at the S&P seasonalities. We talked about September could be a little bit rough, but by the end of September, if you're able to come out of that, it's very favorable historically into the end of the year. You know that Bitcoin October, November, December, especially this time of 4-year cycle, are extremely favorable. 170 seems very well within range. Is that dependent on whether or not this current breakout holds? Likely. Is it dependent on the macro? We're watching the hard data, you know. Now, let's go ahead and do this and just use this model for 1 second. And we'll say into the end of the year, January 2026. And I'll suggest that in January, looking for January 2026, right? And I'm going to come down, and I suggest I'm using this thick line over here, the solid line over here, and you could see we crashed below it during the global lockdowns, and we crashed below it during the FTX blow up. And there's nothing to suggest that we won't crash below it again. And there's every open possibility that it will. But I use that line as a solid line because the higher probabilities outside an event like a global lockdown or a scam being run by one of the largest exchanges in the US, that likely is not going to happen. This orange line is what the power law lows suggest. But again, that assumes something that I do not. They're assuming that this is following the power law and volume decay. I'm not assuming that at all. I'm assuming that we're going to wind up into these, when Bitcoin is overbought, into these upper trenches over here between now and 2030. That's going to happen. Now, let me come back to over here. And now that you know exactly why those lines are there, and I come back to January, and I say that, well, I have by January the floor being right here at 75,000, my solid line. And that also, it holds up pretty well with what expectations were or are for the Bitcoin power law. I'm looking at the power law right now, and I'm wondering why would we traded below it? But I'm not interested in the power law. I'm interested in our work over here. Now, come above it, right? And that's the lowest point. And we're in this sustainable channel, well within this area over here, 2026 over here. That is around 150,000 Bitcoin, which seems right on time to me. And when I said to you a measured move is 170, I was like, wow, that seems elevated, but for sure, I could see it happening. So that's my expectation, somewhere between 150, 170,000. Could we make a leg up by the end of the year and be trading closer to 200,000 for sure. All those things are, and that's a large range between $200,000 and $75,000. That's a really large range. That's what it is. And if you ask me, like, what would my prediction be? I say between 150 and 170. That's assuming that this current breakout holds, and I think that is right on time. But that's like really not too important where Bitcoin is by the end of this year. I'm more interested in future projections. And I just want to go ahead and do one other thing with you. And before we get into it, I could say to you that from what I just explained to you, that I think that by the year February 2027, that there is a strong chance at any time we could trade below the current price. I have it a little higher, right? So if I want to go to current price, say we're at 115, I'll come back to December of 2026 now, and I'll say to you, I think that there is a high probability at any time between now and the end of the year 2026, we trade below where we are today. But I'm also going to say to you, I think there's an extremely low probability beyond 2026 we trade below 115. Y'all remember 55,000 Bitcoin is cheap? And I gave it in context to the following cycle. Now everyone understands 55,000 Bitcoin is cheap. My theory here is as you move into 2027, 115,000 Bitcoin is cheap. So this for me says to me, well, anytime I have an opportunity over the next 2 years to buy below 115, that's an opportunity that I likely will not see into the year 2027. And again, now it doesn't mean that it can't be wrong. And I'm going to talk about that right now and show that with you. So what's interesting, and this started off, first I went to look at Tesla because I was wondering, what do you think the price of Tesla will be by 2030? And to start doing that, I just, like, there is no precision here yet on any of these next instruments that we're going to look. What I'm going to give you is something that's going to make something click and your whole view and vantage of what's taking place be forever changed. And I'll dial it in. I'll dial it in as we continue to keep going over here. Big shout out to Head Snack over here. And, you could see that there was a major change since 2020 in Tesla. And since then, Tesla has been trading within this channel, right? These lines over here. And all the, like, I just did copy and paste. I didn't do anything to them yet, right? But it gives me an idea. And if you ask me and I were to say, for example, I would say, and I'm going to use from, how Bitcoin, we use that solid line. So I would say that solid line is down over here. And I would say that from January, trying to get to January 1st. I'm on a 2-week though. So there we go, December. And then I'm going to come up till, what year did I start? To the December 2026. All right, this is perfect and almost exact. I would say that, and I think it's 20%, but, and I'm a little high on the line. This is actually interesting. All right. This whole theory started actually off of here. I didn't even know that. So it's a 20% CAGR. And you can see that this solid line over here from where we are right now is the baseline, the bolded line. And if you're asking me, what would the price of Tesla likely be into 2030? I would say to you that there's a good chance that the price is going to be at least, hold on a second. Got one more over here. There we go. Close enough, right? 2030. I would say baseline, we're going to be around $440 a share on Tesla. But I would also say to you, that's the baseline. That the probability of Tesla trading at the baseline is at the lowest. And it seems that it's a lot more around here, right? Where it is right now on the baseline. And people could say right now that Tesla actually is probably pretty going through some a little bit of damage after Elon's foray into politics, and that would suggest 673. And then I would suggest to you on the high side, as Tesla has come up over many times into this area over here when it gets a little frothy. I would say at the end of 2030, that's close to just above $1,000 a share. And if I had to give an approximate of where I think that Tesla is going to be, that's what it would be. I say I could almost guarantee it's going to be 440. I would say there's a high likelihood it's going to be above 600, and it could be as high as 1200 into the end of the year. That's what I would say. Now, where are you wrong? And this is going to get really interesting. And I would say to you, well, if Tesla breaks down from here at any point in time, something's different. Let's move over to Amazon really quick because this is kind of where it all started for us. And you could see that Amazon out of the hype phase into the facing reality phase. And then by the end of the decade, it was clear to everyone that not only was Amazon here to stay, not only was it to become the biggest retailer in the world, it also entered into AWS and cloud computing and the ultimate market opportunity. And Amazon saw those exponential gains out of the curve, and you could see it coming in towards the top. Now, when I saw that, like after I saw this, I said to myself, what about Microsoft? Because this is an important one. Microsoft had a very similar situation going on over here. Facing, hype phase. It's facing reality phase, much more condensed over here. And then it entered into the ultimate market opportunity. And notice one thing. Remember, like this is, Windows. By the time it was Windows 95, Bill Gates software running the world. But check this out. This is what happens again is that you see Microsoft move towards the top trenches, which is why I say that's where Bitcoin is headed. Until we had over here, again, here you go, Windows 95. What was going on over here? I really don't know, but sharp consolidation. This is Windows 95 and Microsoft eats the world, and it happens again. And it happens towards the top until this happens. And right over here, I consider this a significant development when Microsoft broke down outside of the lowest tranches. And we'll look in a second what that looks like for Bitcoin or if Amazon were to do that. But Microsoft broke down over here. And why did that happen? This is around the time of the dot-com bubble burst. And also what? Up until then, Microsoft was the monopoly. They had the antitrust cases opening up against Microsoft in this situation. You saw the browsers went from Internet Explorer into everywhere else, Chrome. Like Microsoft's dominance was challenged at this point, and you could see where you're wrong. Like once you broke down from here, there's a major development and something was wrong. And then Microsoft goes sideways over here until we get to, look at this. Now, this new angles, they come in not yet. They come in a little bit. You're going to find out in just a second. So this is the breakdown we're watching. And then Microsoft is able to, that ultimately this looks like a nice spring on an accumulation pattern. And then Microsoft is able to, by this time over here, it enters into the cloud computing and there's a new birth of Microsoft. And then it's entered into, and I could take these lines over here, I'm sure of it. And you could see how they continue to show the structure. I don't know where the structure begins or anything like that, but we should have one down over here. Hold on one second. I'll show you why. Because if Microsoft ever broke this line again, something's wrong. But this is the failure. This is the breakdown. Something's wrong. Is this over here? Remember the gold RSI, once it's able to regain it on the upside? Is this when you start drawing the new structure? I don't know. I don't have I don't have that idea yet. But I do know that Microsoft is in a new structure. And it's different than this first one. You can see the angle of it is much different. So then I looked at and I said to myself, okay, Microsoft is not the only example I know that entered into this type of period. What about gold? And gold is very important because gold is something that we should be relating to Bitcoin in so much as that Bitcoin has a place as far as being the most important monetary asset in the world, as currently gold is. And gold will continue to be, in my opinion, strongly. But Bitcoin is, is rapidly eating the market share of gold, right? Gold, $22 trillion, Bitcoin, $2 trillion. I expect over the next 5 years, gold's market cap continues to grow, but I also expect Bitcoin's market cap continues to grow at a much faster rate than gold's. And I started over here and I looked and I said, this was when gold entered into its first major bull market. And you could say that, so I'm stuttering here, and you should always pay attention to my tone and cadence, because that's when I know there's uncertainty. And in the other assets, we can look at the very bottom and it's very clear. In gold, that's not really established down over here. So I don't really know how to go about doing that from a methodical point of view and to establish it. But here's the first instance where gold breaks that bottom. And again, this bottom is off compared to the previous bottoms that we've looked at, where it's very clear. Amazon hasn't come close to broken its, whether or not it's on Microsoft, which has, or Tesla or Bitcoin or anything like that. But here's a breakdown of gold. And then gold goes into this massive drawdown consolidation. Guys, what does that look like to you? Do you see it? This is the Bitcoin pattern from 2012. This is the Bitcoin pattern that's right now breaking out on MicroStrategy, the run up into the Launchpad, and on Riot. So does this break out now up or not? I don't know I don't know what it does. I just noticed the pattern. Let's see. And then here's still in the Launchpad. Failure. It doesn't launch, right? From that pattern that we looked at, this is a failure of that pattern from my point of view. Easily failure. Interesting. So this area over here, we know that gold entered into a new bull market, and I imagine it's over here. If you come out, we look at these two, and then are these years? Here's the blue one. This is the one we're looking at now. The 2000s, right? The 1970s was the first bull market we looked at. This is the 2000s. And you come over here, and then gold is able to establish a new bull market, and it trades. Look, the low is much later in gold than it was from the earlier. Sorry about that. From the earlier than in its early phase of the bull market, like on those other assets. So I don't know how to establish that. And then here it's breaking down, but I could say this. And so this is the floor, should be the floor right over here. Let me just come down to the low right over here. And that should be the floor. And what happened over here was a crisis. Remember we broke the floor on Bitcoin during the global lockdowns during FTX. This was obviously a crisis. So if we are in a crisis, that needs to be accounted for in our views on whether or not we're seeing structure break permanently, or whether or not there is an exterior event that is causing the breakdown, and whether or not it's just a massive buying opportunity. Move it forward over here and ultimately breakdown, retest, resumption, the breakdown from over here. And gold goes into that long consolidation and is entered into another. And and the purpose of this is, well, could I say that when gold ultimately breaks below here, its current bull market is over? Yeah, I would think that's, for me, that's a very strong probability that if gold breaks, when gold breaks below here, then this current super cycle is now over. But more importantly, for me, this relates to Bitcoin. And how so? Well, my expectations as Bitcoin has entered the ultimate market opportunity, that we're going to see this current baseline hold. Now, it could be tested again. We talked about that, but that I'm going to go ahead and remove this for 1 second so I could show you the lower baselines. And this structure does continue all the way down. All right. So you get over there. But I think it's left this phase. So you can see that again. I think it's left this phase after it's been able to establish itself. Oh, I'm trying to get that picture to come back. It's not doing it. There we go. If at any point in time going forward, we see Bitcoin break below, we have the floor in the solid line. Right below the floor, we have the wicks down. This for me is the floor, the dotted line below it. I don't think that. I think it's possible to come in and touch the floor at any point in time outside of a crisis. I don't think we break below it, and if we do, I think that the COVID lows hold. You saw that on gold in 2008. The lows of 2008 held until it broke. But at any point in time, as Bitcoin's adoption continues and it moves through, you know, the base case of Bitcoin is two things. The debasement of the fiat, the underlying, continues. And in a debt-based system, that is a mathematical absolute certainty. And also the continued adoption. And, at first, slowly, and then suddenly, Bitcoin here entering the early majority phase is still extremely early on the adoption curve, but it's very clear that the adoption rate is accelerating. And assuming that happens, continues to happen, I don't think that we break the bottom over here. And I think that we actually end up through the end of this decade towards the top trenches over here, which, the question is when do we see $1.2 million Bitcoin? And I would say, from what I just told you, and from 2008 into 2030, you enter into and that's a conservative point of view of the top trenches. But I have right over here by, in in 2029, early 2029, May 2029, there's probably a very strong probability that we've reached $1.2 million Bitcoin by then. And I would say on a conservative level, though, that doesn't happen all the way using the baseline and 1.2 all the way through 2031. So I would think the earliest it happens is into that May, right? Into May of, I don't know if I just told you 2029. The earliest and the latest I think that happens is into by the end of 2031. However, if and as we enter into, move through the early majority and eventually enter into the late majority, and as you see that like this is early adopters, that's you're into early majority, and then you enter the late majority, and then you see the adoption curve go like this. As we enter into this area over here, then I think there's a strong possibility that this is where this breaks. I don't know, like, we're far from even, we just begun the early majority. We're not yet close to the late majority, but as we enter into the late majority phase, at that point in time, that's when I think there's a strong chance that this ultimately breaks. And again, that means we're coming up towards the top way before this break. And when this does break, that suggests to me that there's much better allocation at that point in time for your money than Bitcoin because the appreciation has matured out, and that likely Bitcoin is entering into a phase of a consolidation. And consolidation means drawdown too. Does that mean that Bitcoin ever won't make a new phase up and into a new structure? No, it doesn't. There are things that in the future that could lead to that. We're so far away from there. We don't need to get into that. This is what I wanted to present to you today, and I think it's wildly fascinating. The structure across markets, giving us that opportunity to manage risk around it. I think that's much more important than being able to project where you think price is going to be 3 months from now. It does help project where it'll be 3 years from now, or I think we did 5 years from now, looking into 2030 and giving what are the lowest expectations, what is the highest probability expectation, and then what would be an elevated expectation. Listen, if you're new here, welcome. Make sure if you made it this far, you are CTM strong. Not only before leaving, hit the thumbs up. Make sure you subscribe to the channel. I'll see you tomorrow, everyone. Have a beautiful day. God bless you. That if you're still here, you are one of the deep people. That's for sure. We do our best to filter it out. Little subtle things to filter out and keep those who understand signal with us. God bless you all. CTM. I'll see you all tomorrow.